Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 25th of July. The information provided this evening is general advice only. As a reminder, we now have our Platinum membership, which is an academy education courses combining ongoing education with mentoring. If you're running investment portfolios and or trading portfolios, a common mistake when I see new clients coming to me is that they're not separating their trading strategy from their investment strategy. They may be holding on to trades and letting what was intended to be a short-term trade become a long-term investment. And the other common mistake I see is in their investment portfolio, the weightings are out of whack, and by that often the cause is averaging down too often in smaller speculative companies, and as a result ending up with the weightings in their portfolio not accurately reflecting the quality of the company. So meaning the better quality companies obviously should be a greater percentage weighting in your investment portfolio. So a big part of the reason why we're providing this education course is to help clients implement their trading plans, separate trading from investing, and then obviously use the technology tools that we develop to enhance both the investment and trading returns. And then we have these masterclasses, which is all part of the Platinum membership. So if you have an interest in automated trading, so this is very popular for clients wanting to trade US equities, we have technology to help automate the entry exit so you're not having to stay up and monitor the US market. If you have an interest in short selling, there's module there to integrate our technology tools and education around building a strategy for short selling. And then likewise, if you're interested in US equities, for example, there's a module there to cover everything you need to know on US equities. But certainly the starting point is making sure that you've got a documented trading plan, a documented investment plan, and that the two activities are separated under clearly different disciplined framework. So that Platinum membership is $4,400, which is a discounted price, so we'll be going up to $6,890. So for a limited time, you can join up as a Platinum member. And if you'd like to know more about that, please contact me on 1300 614 002, and I can provide you further detail on it tomorrow. As always, if you're looking for further information on our products, please visit the website. And just a reminder, there's the phone number again there, 1300 614 002, and also my email address. I look forward to hearing from you. Starting this evening, we'll have a look at what's happening in the indices, then I'll go into the blog, and then we'll cover the ASX Top 50 and obviously focus on where I see opportunities in the market that are ready from both a trading standpoint and additions to your investment portfolio. So before we do that, let's look at the backdrop of the market, starting with the major indices. So starting here with the Nasdaq. And the market's had this recovery over the last 4 weeks. It's made a series of higher highs and higher lows. We've shuffled this higher support line in under this level. The market remains above the 10-day average. So from a short-term momentum analysis, it wouldn't be until the market closed below that average it would start to get a little bit cautious on this recovery. But for the moment, it certainly has to be given the benefit of the doubt. If we look at the S&P 500, we blend both fundamentals and technicals here. So looking at the average earnings for the S&P 500, and your clients that have been following these recordings over prior weeks would know we're looking for around $45 of earnings. That's the average earnings for all S&P 500 companies in this June quarter results, which we're starting to see those numbers come through at the moment. So the market's about fair value if we deliver that level of earnings. So at about 16, 17 times earnings, the S&P 500 delivering that $45 fair value could be anywhere from where we are at the moment up to around 4,200 points for the index. our local market, the XJO, similar pattern here. So we have the higher high, higher low. We've shuffled the support in under that structure there, and just highlighting that the price action's above the 10-day average. So wouldn't get cautious or wouldn't be pursuing any short trades in the market until we saw, as a minimum, that index roll over and trade below the average. And we'll spend a fair bit of time as I go through the market tonight talking a lot more about this pattern, because it's present in a lot of the individual stocks, and that'll help us to identify the trades and investments that we want to be focusing on. Before I get into the top 50, let's have a look at what's gone on the blog. So as a paying subscriber to our technology, every day you get access to our 11 a.m. blog, and that's what I'm just going to take you through at the moment. So clicking on the news button takes you through to this, and this is really just a selection of what I think are key important topics to share with our clients on a daily basis. So NAB, keeping an eye on this chart pattern. So we've had NAB create a lower low, lower high. It's under Undersell Signals, but the price action's still above the moving average there, so it's not quite ready to consider as a short trade, but it's certainly one you want to be monitoring. And the reversal will look something like this. It'll start to run into some resistance, and then the price action will break below that average. At that point, that's when our interest in considering it from a short perspective would be entertained. So I'll look at that as we go through the charts this evening. Santos is under algorithm buy signal, so that's the switch from this red box up the top to the green box here at the bottom. Higher highs, higher lows, so it's a bullish pattern. So it's really just starting to draw clients' attention to Santos. And then we get in and start to look at it a little bit closer here. So we're starting to look at this on watch for first test, first fail. So you'll hear me reference that a fair bit this evening. And that's a reference to the market rallying off a support, pulling back, and then creating a new level of support. And as I move through the charts, you'll see this pattern repeated a number of times. So this is an updated version of Santos as of today. So the rally up here, the pullback, and now what we're waiting to see is there enough buying support in the market for Santos to start to move higher without it taking out that prior low there. So if you're a short-term trader, that's one of the strategies that we focus on, this first test, first fail. Our Federal Reserve's due to raise interest rates over the next day or two. The expectation is it'll be 75 basis points. Week 3 of US earnings at the moment, so the big results, not too much this evening, but certainly tomorrow night, Microsoft and Alphabet, Visa, Coca-Cola, McDonald's, and big companies reporting their numbers tomorrow night. Likewise on Wednesday, you've got Boeing, Meta, Qualcomm. So this week's really going to set the tone for what that likely numbers going to be around average earnings, and can it meet that consensus or expectation of around $45. What we are seeing is the services and manufacturing sector in the US slow down. Now, that's not a surprise because the market's essentially already priced in a mild recession in the US. So the market's already expecting these service and manufacturing data points to turn down. More than half of the S&P 500 companies are down by more than 50%. So, just understand that beneath the surface, the damage is significant in the individual companies that make up the S&P 500. So that's just trying to highlight to you the amount of bad news that is already priced into the market. So you're going to see some negative headlines, but arguably a lot of that is already priced into the market. So this is a graphic representation of that services and manufacturing data turning down. Traditionally, anything above 50 is considered sort of within sort of normal level of economic expansion. Anything below 50 would be a contraction, and we're starting to see that at the moment with the reading coming in at 47.5. So what that feeds through to is this next graph, which is the 10-year Treasury yield. So despite interest rates moving higher, the slightly longer end of the yield curve, so the 10-year Treasuries, have actually moved lower over the last 3 weeks. And that's what that's telling us is that we're probably getting close to the end of the rate hike cycle in the US. So we'll probably get this, we will likely get the 75 basis points. So we're definitely getting a rate rise, whether it's 50, 75, or a full 100 basis points or 1%. We'll have to wait and see. But consensus is for 0.75% rise in US interest rates in the coming days. And then we may just get something more like 25 basis points next month. And that's what the bond market is saying, is that economic growth is going to slow to the point where interest rates don't need to keep rising at the rate that they have been. What that means for the S&P 500, I've sort of captured that in the discussion so far. The market's anticipating 2023 earnings at about 5.4%, around 16, 17 times multiple. Supports the current valuation. That first test, first fail pattern that we looked at there, if the market broke below that moving average or broke below this support line, so if you're looking for a specific number on the S&P 500, if the index broke back down below 3,738, it's going to be negative because it takes out that level of support that's been building over the last month or two. Just scrolling back a bit further, Ramsay Healthcare, quite like that. So for your investment portfolio, if you're looking for a defensive income generator, Ramsay at around $70, certainly consideration. Treasury Wines, we'll look at that closer tonight. But there's that first test, first fail pattern there again that I've highlighted. And just moving back through the articles, so just going to capture the last 7 days, what's gone on the blog. I won't spend time on these signal emails. Obviously, if you're joining as part of your free trial, I can spend time with you on the phone and help explain more about the signals and how they work. How to capture growth outside the US. So rather than taking exposure to emerging markets, the Asia top 50 is my preferred way to capture recovery in assets that are essentially at discounted prices, and often they're trading at a PE ratio about half of some of the US similar type of companies. So there's value in that IAA, which is the iShares 50. BHP production across the whole mining sector, generally the themes being higher input costs, lower realised commodity prices, and you're seeing a fairly substantial adjustment in these major resources. JB Hi-Fi delivered 3.5% top-line revenue growth. A little bit cautious on the bounce back here in JB Hi-Fi, and it'll be look to sell JB Hi-Fi on a rally up to around that $50 level. General Electric splitting into 3 companies. So I was just trying to draw to your attention there the timing around that. So that's a US obviously listing there. Every Saturday morning, my focus on the blog is US stocks. So US financials, we've seen a rally in that off the lows. Moving further back, semiconductors. So this has been a great trade for us, being long semiconductors over the last few weeks. That certainly worked in our favour, and you can see there that first test, first fail pattern there, that higher support that creates the entry opportunity for us, and we've had a nice rally out of that ETF. And then there we are, back to last week's webinar. So again, just a reminder, that's the blog. If you signed up as a user of the technology, then you're going to receive that email every morning at 11 a.m. and you can click on those links to go through and read that daily research. So in tonight's recording, I'm going to select Watchlist, come across here, select from the drop-down ASX 50. We're going to arrange this in the worst performing stock at the top, and then I'm going to switch this so we got the sell signals. So what I'm going to do is go through the stocks that are underperformed today in the market, and we have them under sell signal. We're going to get part of the way through, and it'll switch from stocks that are under sell into stocks that are under buy. Anything that's under buy here, you'd expect to find in the model portfolio. So if you clicked on model portfolio, went to the ASX 50, and the stocks that are under buy conditions are in this model portfolio, and if you scroll down the page you can see the recently closed positions, and if you scroll down even further you can see the net asset value simulation of the portfolio. So if you put, and we use $1 million as a starting balance, but obviously it could be any any number effectively, whether it's $10,000 or 10 million. So this shows you the percentage performance of the portfolio based on a 5% allocation to each stock. So if you have more time and you've set up a trial to the technology, I can walk you through this model portfolio and explain a lot more about how this works, but we'll be covering a lot of these stocks as I go through the recording this evening. So starting with SEEK, the first group of stocks, as I said, are all Undersell Signals. So what you're going to find is the leading indicator on this chart is the red box up the top there, and what that is measuring is that the momentum's rolled over and we now have a lower low, lower high price structure. You can also reference these red and green arrows as interim signals. So if you think about the red and green boxes looking more longer term trends, the red and green arrows are shorter term, so over sort of really sort of less than a 6-month period. And then we get into a real sort of closer under the microscope look over the last week or two when we're trying to refine the entry, especially when we're looking at shorter term trades. So in the case of SEEK, the stock just simply got too expensive from a PE ratio. We've seen the correction in technology stocks across the world from high PE. SEEK has been part of that. We've got lower lows, lower highs. There's the sell signal overhead resistance at 32. At the moment it's moving lower, but we're in this corrective kind of counter trend move here from simply oversold levels, but it's not a stock that we're doing anything in at present at the moment. Wesfarmers, interesting, just shifted to sell signal today. We had an upside target there of around $50. We traded that off that $40 support level, so it's delivered about 15% return for us over the last 4 weeks or so, but getting up to a point where you can start to think taking profit on that trade. Zero Undersell Signal at the moment. CSL, Undersell, I'd expect CSL to create a higher low over the coming months, and we're likely to see that added back into the model portfolio. And the longer term growth for CSL from a fundamental standpoint looks attractive. The upcoming earnings result in the next 3 weeks or so, we'll be looking for earnings growth in the high single digits, so 8 to 10% EPS growth from CSL. ResMed, this is one of the better performing stocks in the model. It originally switched from sell into buy, and now it's been closed out of the model portfolio. So just to show you how that works, if we go down the list here, ResMed, there it is. It was bought on the 10th of the 10th, 2018. It was closed out on the 27th of the 6th. Delivered 109% return. It was owned for 1,356 days. So from this you can reach the conclusion that this model portfolio is more of a longer term investment strategy, and it captures the dividends as well. So to get notified when something's added or removed from this model, you just need to turn that envelope on and you're going to get an email notification to let you know about that. So in the case of ResMed, Undersell Conditions, that's been removed from the portfolio. Lendlease, Undersell. Westpac, Undersell Conditions. So I'll skip through some of these now. NAB, I made a post on the blog today, so let's just have a closer look at what I'm talking about here. So we've got the algorithm sell signal, which means that when that first appears, NAB's been removed from the model portfolio. So again, if we go down here, we can see NAB was removed on the 22nd, so on Friday it was removed, and for a 16% gain. If we go back to the chart on NAB, if you're looking to actually short this stock, what you're going to be waiting for is the red arrow and then the price action to be below that moving average. And I'll continue to track that, and I'll draw your attention to that setup should it develop, and I'll draw your attention to that via the blog. So what we've done now is we've moved through this group here, we got to NAB. Moving on to the next one here is Medibank, Undersell Conditions, Stocklands, Undersell Conditions, Brambles, Undersell. Brambles is likely to shift back to buy conditions in the coming months, and what that'll mean is a switch from that red marker up the top to the green marker at the bottom, and when that happens we'll see it added into the model portfolio, and obviously if you had that email notification on, you're going to get alerted to that. Aristocrat Leisure under sell conditions, not doing there at the moment. ASX under sell conditions, so we've closed out that ASX trade recently for a profit. Woolworths undersell. So the common chart trend lines that I have in place on any of these stocks that are under sell conditions is the resistance levels. So I'm looking at the overhead resistance and how price behaves at or near that resistance. Just a reminder, if you turn on Leon's chart, so up on the toolbar, show Leon's charts, if you click on that, it'll go from grey to green, and you're going to get these, whatever annotations and support resistance lines I have in place will automatically show up on your charts. If we look at Rio, had a sell signal there at 120, now down at 97. We could be getting fairly close to where they're due for a bounce higher, some of these bigger commodity names, but for the time being, they're still going through a structure longer term of these lower low, lower highs. So the bounce back, we would ultimately end up being a seller of that on the next rally. Kiwi Insurance under sell signals, not doing it there at the moment. BHP had sell signals back here, corrected from 50 down to 37 again. Just drawing your attention to the green arrow, price action starting to get above the moving average. So there's a shorter term trade there, and it's likely a bounce higher. Fortescue, similar type of thing, under primary sell conditions up here, but we got this shorter term green arrow price action above the average, and as part of that slight little bounce back that we appear to be sort of getting underway in these mining stocks. Suncorp under sell conditions, Insurance Australia under sell, Computer Share. So now what we've done is shifted into stocks that are under buy conditions. So Computer Share shifted from sell into buy, which is the green box at the bottom here. The subsequent signals all did a good job of picking up additional entry opportunities. The stock just looks a little expensive and probably due for a slightly deeper pullback, but the uptrend's certainly still in place there. Computer Share's a beneficiary of higher interest rates, given that they manage money on deposit essentially for clients, and that's helping to improve their bottom line, as is a strong US dollar. Cochlear under buy conditions, so switch from sell into buy. Support here at around $200, looking for Cochlear to deliver earnings growth around that 8 to 10%. GPT within the property trust, again, I just urge you to look at SLF, which is an ETF, a basket trade across the REITs. But GPT under buy conditions. Treasury Wines under buy. So if we have a look at the pattern happening here, Treasury's really been tracking sideways around that $10 support. We've now got this higher high and shuffled the support line in under that level of support there. So we're happy to remain bullish on Treasury, but recognise that it's been in a sideways consolidation for 12 months. But the forecast here is that it ends up breaking to the upside of that consolidation range. Telstra, under primary buy conditions, which again is a reference from the switch from sell into buy conditions, largely moving sideways over the last 8 months or so. But you can see here the higher levels of support that I've put in place. This was a pretty strong level of buying interest off the $3.60 support line there, and it appears to be sort of more pushing into the top end of that range, and obviously we're coming into a ex-dividend or a dividend payment period for Telstra. Mirvac under sell condition, under buy, but not doing too much there. Sonic under buy conditions, support there, I think sort of within a fairly volatile market. Sonic, Ramsay Healthcare, Cochlear, those type of healthcare names, there's room for those in your investment portfolio. You just need to make sure the weightings of allocated funds to those names is done correctly, and that's certainly something that we cover in that Platinum membership education course. Sonic Healthcare, I like Woodside Petroleum, switched from sell conditions here into buy at around $20. You can see the higher levels of support here at around 30. It seems to me at the moment that a good outcome for oil prices would be to find support around that 90, 95 and track sideways. And out of these energy names, Santos, if you're looking for a shorter term trade, might be the name that you pay closer attention to. But we continue to hold Woodside in our portfolios at the moment. Commonwealth Bank, likely to shift to sell signals. I suspect we're getting fairly close. If we saw a rally in CBA maybe back up over $100, I think we'll see that shift to sell conditions, at which time it'll be removed from the model portfolio. So it went into the model after going from sell conditions there into buy at around $81, and we're likely to see it removed up there at around 100, 102, something like that. So I'll certainly keep an eye out for that switch to sell signal there on CBA. Centre Group, under buy conditions, again, think about SLF over too many of these ETFs. Santos, so let's have a closer look at this. So from an investor standpoint, you can be accumulating a position in Santos, so let's assume you have no exposure to Santos in your portfolio at the moment. You'd be adding sort of a third of the position within this band here, a third in the middle and a third at the bottom. Again, that a lot more on that. Management of investment position sizing is covered in the Platinum mentoring courses. From a trading standpoint, what we're looking at here, trading is a different discipline to investing. So trading, you're running tight stop losses and you're looking at the market under a much closer or shorter time frame. So if we have a look at what I'm referring to there, before taking on this as a short-term trade, a couple of things need to happen. We've got the first test, first fail in place here, but the support hasn't yet been, verified, if you like, in that we've still got the downtrend occurring here over the last 3 days. We haven't got sort of a strong evidence where the market's closing on the session highs after finding buying support here and these shorter term momentum indicators turning higher. So there's a couple of different ways to measure and look at that. Certainly monitoring these bars, and what you're looking for is essentially a shift to green, positive days and evidence that the market's rising off that support, or in simple terms just waiting for the market to close above that 10-day average, which would be evidence that that the shorter term momentum's moving higher. So before setting up that as a short-term trade, that's the pattern that I'm looking for, and I'll keep you updated on that entry condition via the blog. Endeavour Group, so this is under buy conditions, added into the model portfolio here at around $7.16, now pushing up towards $8. BlueScope Steel under buy conditions, so this is another one here from a short-term trade standpoint where we've had the rally higher, we're now getting the correction. What we're looking for is a first test, first fail, and that'll set up a shorter term trading position there. So Santos and BlueScope are certainly two that are on our radar. From a longer term investment portfolio, you can see there the word accumulate, and again a reference to that is a third of the position size here, a third in the middle and a third at the lower end, and that's simply driven by the fact that around this $15 I'm comfortable that BlueScope's offering reasonable long-term value there. Ramsay Healthcare for the investor portfolio here, the correction from $85 down to $70 back on support, and certainly have a think about adding that to your portfolio. Macquarie really likely to mainly track sideways. The US banking results have come through. JP Morgan was probably the shock of the market. They had fairly significant write-downs. They've pre-provisioned for about $1.4 billion of bad debts. But as I mentioned last week, the bright spot really is that the June provisioning was half of the March provisioning, so they don't appear to be seeing a major pickup in bad loans. For the case of Macquarie, they got a slightly, their management-based, fee-based income is attractive, managing, among other things, high-quality global infrastructure. So we like Macquarie more so than we do the four major banks. Support for Macquarie's around this 150 level. So we hold that in our portfolio. Coles switched from sell conditions here into buy. The algorithm did a good job of picking up that higher low pattern there. The Coles rallied from $16.50 up to $20, or up to $19, I should say. That was the target. If you go back over recent weeks, I've been talking about Coles getting back to around $19 before it runs into resistance. At $19, we've had this red arrow, which is kind of a first sign that, for this move, it's probably getting a little bit extended. I don't think the downside risks are substantial there for Coles, so it's fine to keep holding the stock for the dividend, but just be mindful that you're getting up towards a level of resistance there, where you could even think about selling a covered call to drive extra income out of the trade. Now, these gold stocks have really been hammered over the last few months. US dollar continues to push higher, and it's been driving gold prices down. Has gold found a bottom? So that's now the question. What's going to bring buyers back into the market is an increasing consensus that US interest rates have largely, the Federal Reserve's done what they needed to, and the market's obviously looking forward a little, so that the market will accept that there's 75 basis point coming through this week, maybe even another quarter basis point rise next month. But we're monitoring gold for some evidence of a pickup in buying activity, and you can't do a whole lot more than what I've done here with this pattern, is to go, okay, we hit oversold levels here, there's been some buying interest, and do we get that sort of higher low structure where the support level holds? We've certainly got these shorter term momentum indicators turning higher. In the case of Newcrest, you've got the price action above the 10-day average. If we look at the gradient of this average, it certainly had been heading lower in one direction there. We're now starting to see a bit of flattening in that. We'll probably, next stage of that will be a slight pickup in the trend of that moving average. But again, to keep it simple, you've got a higher level of support there, and the price action's above the average and needs to build on that a little bit further as evidence of buying coming into these gold names. ANZ, under algorithm buy conditions, I think ANZ switches to sell conditions over the next month or two, so there might be a little bounce higher, as I've been alluding to, but ultimately probably end up being a seller of those banking stocks that we've got at the moment. Dexus, under buy conditions, likewise likely to see that removed from the portfolio in the coming months. And I just reiterate SLF as the ETF, rather than owning too many of the individual ETFs. Individual REITs. Goodman Group's a bit of an exception. This delivers above average earnings growth. If we have a look at the performance of this, it's done well since switching from sell conditions into buy conditions. We've got support here at around this $17 level, and the higher low there that I've shuffled in. If we just zoom that in and have a closer look, first test, first fail, momentum above the moving average, and even today's price action looks reasonably positive there. I'll be looking for Goodman Group to maybe trade back towards that $21, $22 level, and I think that would be sort of full value. And again, what's the catalyst to do that? Obviously, besides the fact the company's delivering good earnings growth, is the interest rate story. If the market starts reducing its fear around how quickly interest rates are rising, or how many rate rises we're likely to have in the US, then something like Goodman Group can do better in that environment. Origin Energy, we're looking for this to pull back and switch or to have another subsequent buy signal. It's in the model portfolio because it shifted from sell into buy conditions at the beginning of this upward rally here at 470. It's had a correction from 7 down to 550. You have the green arrow there, supported around 530, and we're just watching to see if we're getting close to another buy signal, but reasonably comfortable with Origin. If you don't own it in portfolios, certainly adding it, simply because it is under primary buy conditions. Amcor, under buy conditions, switched from sell there into buy at around $16.50, now trading up towards $18. hold that in portfolio. South 32 under buy conditions. So we've seen a fair correction in these resource names at the moment. And in the case of South 32, back at around this 350 level, should be getting close to support there. And you can see there that I've flagged that we're buyers of South 32 on this pullback here. APA Group switched from sell conditions into buy conditions, getting up near resistance there. It's had a great rally since switching to buy conditions. James Hardie, so this has been a bit of a short-term trade, so that similar pattern there, that first test, first fail, had the support line in under that low, and we've now got reasonable movement in our favour here. Watching this for a red arrow to appear as the first warning, and then if we were to see price action below the moving average. Transurban under buy conditions, it's doing reasonably well. Mineral Resources under buy conditions, that's our preferred iron ore stock at the moment. Qantas under buy conditions, so you can see here the higher low there again, that first test, first fail. So that's a trade that we actually have open at the moment. And Northern Star, so let's have a look at what's happening here. So similar to Newcrest, we've had that sort of move off the oversold levels. You've got the green arrow, the price action above the moving average. We don't yet have that first test, first fail. So if you're wanting to sort of wait for a safer setup pattern, you'd be waiting for that first test, first fail to develop. But equally, it's under buy conditions. The price action's above the moving average. So it's something that you can at least start to sort of focus on a daily basis at the moment. These moves in the gold stocks. So, and there we are. Back to the beginning and back to seat. So thank you for listening in this evening. Next week we'll spend time again revisiting the pivot table, which is the short-term trading alerts. We've got a number of stocks in here that have that first test, first fail set up. So we'll spend some time in next Monday night's webinar breaking up the difference between the stocks that we're taking action on the investor portfolio, and then really sort of putting a fence around those handful of short-term trades off the first test, first fail. So I look forward to speaking with you again next week. And again, just as a reminder, if you'd like to give me a call tomorrow to